Okay, so welcome everybody for our Crypto Valley Social Club edition, this time together with Julien Donnet, no?
Donate.
Product manager or head product management at the CDX, the digital exchange of the SIX group. And I'm very pleased to have you here to have a good discussion on what we can learn actually from your pilots that you did with the Helvetia 1, 2, 3, 4.
Something like that.
But quickly, my name's Dennis Flad. I'm the chair of the Enterprise Blockchain Working Group of the Crypto Valley Association. The Crypto Valley Associations, for the ones that don't know it, is a non-profit organization located in Zug, but has chapters and around the world. And the main objective is really to help the crypto ecosystems to foster, actually, to grow, to become bigger. And we in the Enterprise Blockchain Working Group, we really try as well to help that, to bring the idea of enterprise blockchain ideas closer to the people, to see the advantages of enterprise blockchain. And we do that in this kind of interview sessions or one-on-one fire talks like tonight. Yeah, and tonight, topic is, I mean, you did pilots with central bank digital coins,
Yep.
CBDC, or wholesale CBDC in your currency, in your setup. And of course, that is for the enterprise blockchain working group or for the enterprise blockchain world very interesting as well, because most of the enterprise blockchain use cases are about trade. It's not trade of assets or about money, and it's, usually it is, luxury watches, cars, art, all these kind of things, but there's always you're trading something against money. And that is, of course, a lot of these enterprise blockchain solutions. It's always a problem. Okay, how do I make the settlement? So I thought, actually, you can tell us how you do the settlement. Can you give us perhaps at the start a quick overview on CDX and especially what the link then to CBDC?
Yes, of course. So SDX stands for SIX Digital Exchange. So we are part of the SIX group, which operates most of the financial infrastructure in Switzerland. So namely payment, settlement, financial data, and so on and so forth. So we are a subset of SIX group. We have two main pillars in our business. The first pillar is Web3 and crypto. So we offer custody to our clients for cryptocurrencies. We offer trading for cryptocurrencies, and we try also to offer peripheral services around smart contracts. So we want to also help our members to either innovate using smart contracts or find business use cases and help them deal with the infrastructure behind it. The second pillar, and this is currently our bigger pillar, is the regulated business, so digital securities. And this pillar runs on a Corda infrastructure, so a private permissioned DLT infrastructure, and runs a regulated exchange. The exchange is not running on Corda. It runs with legacy tech from NASDAQ and a CSD. And our main difference is that our CSD, which is fully regulated, so a central securities depository, is running on DLT. And it is the only regulated CSD in the world which is running on DLT infrastructure fully. So out of this CSD, we offer a range of different features, possibilities, you name it. And you mentioned one, settlement. So we offer the possibility to issue securities, so bonds, for instance. Bonds are effectively issued as tokens. We offer the possibility to trade the securities. So if you want to do a delivery free of payment, a delivery versus payment, this is all possible within our CSD. We offer a coverage regarding corporate actions and so on and so forth. So basically, you find in our CSD all the basic functionalities that you will expect from a securities depository. Our clients are banks and securities firms. So only we don't use We don't provide any services to customers which are private. We don't do B2C. We do only B2B with regulated financial entities in Switzerland and abroad, also in Europe some. So we see ourselves really as an enabler, a catalyst for innovation around digital assets. You know, it's a very niche field at the moment. It's still nascent. It's not something which is which has achieved scale yet. So we see ourselves also as a partner for our members. We want to build things together. We want to generate business models together, business cases to get together, and we want to help our members to bring their projects to life. Mm-hmm. So now you asked me what is the link with CBDCs. So as you can imagine, when you are running financial infrastructure, you deal with securities, with assets, but then you deal also with cash, with money. And our vision long-term is that a big part of the wealth in the future will be tokenized on a blockchain. But not only one. It could be a mix of blockchains. It could be permissioned ones, public ones. It could be, you know, any kind of blockchains. And as such, you will find assets which can be real estate. It can be securities. It can be whatever you think has value would be represented as tokens on some kind of blockchains. And we at SDX, we see ourselves as one of the gateways towards these different blockchains, these different tokenization islands, we call them. And as such, we want to offer our members access to these different assets which lay scattered all around the place. And we want to be able to bring them into a cohesive, you know, offering to our members. Now, when you are speaking about cash, you have different types of money and cash which are tokenized. You have, you know, I think most of the people here are familiar with the USDCs and the USDTs of this world, you know, all this private money which is tokenized on public blockchains. In our system, we also have our own version of tokenized cash. At SDX, we have tokenized Swiss franc and tokenized euro, which is available to our members. But it's not the same as central bank money, right? Like if you speak about USDC, USDT, you take a risk with Circle, with Tether, because if they default, basically your tokens are worthless. Mm-hmm. If you use our version of tokenized cash, you also basically have a liability with us. And this can be fine for most people, but for, you know, very risk-averse banks, they expect more. They expect to have some kind of cash vehicle, which is a liability of the central bank, and as such is as good as, you know, physical banknotes and coins. Mm-hmm. And that's our angle. That's why for us, it's important to have a form of tokenized cash, which is completely risk-free and which is backed by the central bank. Mm-hmm.
Because I remember as well in the original setup, and I mean, you work on Coda, and Coda is probably it's one of the blockchains most enterprise blockchain solutions are using, so that's why it's a very good example here. You said at the beginning, I think you were fully on pre-financed setup. So the first users of your platform needed to buy the tokens from you that you had on the Coda network and needed to pre-finance. But I think that has its upsides and its downsides, as you said.
Yes, absolutely. Maybe you don't have to buy the tokens from us. This is not the case. Huh?
Yeah, okay.
So how the tokens are created, how this tokenized version of Swiss francs and euro is created at SDX is basically via first a deposit in our SIC account. So in the regular system, mm-hmm. And once the deposit is being done in our SIC account, then it triggers the emission of a tokenized version of this cash in the SDX ecosystem. Mm-hmm. So this is how it works for the tokenized cash.
Not buying it, sorry.
There we go.
I'm lending it.
There we go. You know, we mentioned Corda, and this is also a question I have a lot when I discuss with crypto native crowds, let's say. why do you use Corda? Why are you on Corda? And this question is even more relevant today because we have different ways to represent the securities on chain now with the DLT pilot regime. But at the time, we were filing for the license to operate, and one of our main differentiator is always to be regulated.
Mm-hmm.
You had limited choices in terms of technology.
Yeah.
And today, our choice, I think, is fruitful. We operate a business that works and that is in the rails of the regulation. And as such, so far, the choice was a good one.
Yeah.
It does not mean that in the future, there will be other ways as well to emit securities in other networks. But so far, our case is a demonstrated case.
Well, I think the one thing is the technology that you have behind, the other thing is the logic.
Yep.
And I think that logic, how you have set it up with DLT and Coda, I think that will not really change because that's how financial institutions basically think and work and feel comfortable with.
Yes.
And so on. But the pre-financing, I think they felt not very comfortable with, didn't they?
So, I mean, maybe let's take a step back and go back to Helvetia. As is, and then from Helvetia, let's move to the pre-financing topic because I think this is a big one, and this is a friction full topic.
Let's do that.
So we established why we needed tokenized cash or a risk-free version of tokenized cash. Now, for the SNB and for Switzerland, Switzerland was always perceived as a place where innovation thrives for digital assets. We had a lot of different associations which established their HQs in Zug, which created their incorporation here. We have also a lot of traction in the tokenized space. Tokenization is also a topic which is going forward. So for the SNB, it was also important to be part of the discussion and to investigate how you could use a tokenized version of central bank money as the cash leg in transactions. So this was for them important because they are looking for financial stability, and as such, this goes also with diminishing the risk of liquidity and settlement, and there is no better way to do it than using a central bank money. So it was also the goal for them to reinforce their position as an anchor in the financial system in Switzerland, and also a good opportunity for them to participate in the private sector innovation. So how can we not block, but enable financial innovation coming from the public sector? So this was basically, I think, the first, and I'm not from the SNB, so maybe I'm not telling the full story, but at least the one I'm aware of. So they had strong reasons why they wanted to start to dig into the topic of central bank digital currencies. And over the span of the last 5 to 6 years, we had different phases in Helvetia. And every phase in Helvetia, which is the CBDC project in Switzerland, you basically achieve something to go towards the goal to have something that can be usable in today's world. So the first occurrence of Helvetia was in 2018. And in 2018, the goal was to stay in test environments and prove that you can issue, that you can redeem, that you can also use CBDCs as cash in a DLT system. And at the end, we were able to process all these different use cases in test environment, and it was a success. The second phase of Helvetia was, now we want to include private sector. Now we want to include also banks in the story, and we want to also enable the banks to use the CBDC in ways they are comfortable with. So when you are a bank, you have a core banking, and usually you are happy to discuss with other banks, with other systems through ISO messaging, right? So we, as a financial market infrastructure, we also cater to this need. We have interfaces with ISO messages, and as such, one of the topics of the phase 2 of Helvetia was to promote this integration with the core banking systems. and also with the RTGS system in Switzerland, so the payment system. Another, and I will come back to this afterwards, big innovation in the second phase was the ability to monitor the different transactions using CBDC. So we are still in test, but as a central bank, as you can imagine, governance, control over your currency is paramount. It's extremely important. So while in phase one, it was more about demonstrating that the transactions can happen, in phase two, we start to dig into what does it mean as a central bank to manage a central bank digital currency on a third-party platform while remaining in control, while remaining comfortable with how it is being used. Now, phase three ended this year in June 2024, and I joined SDX last year, so I only saw this within Helvetia. But I think it was a very big step forward because this was the first time we transitioned from test environment to production. So we are not anymore speaking about, I don't want to say dummy transactions, but at least transactions which are not implying a real exchange of value. But now we have productive transactions where you have members, clients who are expecting it to work correctly, and you are dealing with real money, which is the equivalent of what lies in the sight deposits of the SNB on the other side. So as such, the pressure to make it work and the pressure to ensure that it works within the right rails and with the right controls in place is way bigger. And over the year, I think we achieved what was supposed to happen within this third phase. We had multiple emissions or issuances of bonds using wholesale CBDC. We had market transactions also including wholesale CBDC, and everything worked according to plan. Now we are entering since July the Helvetia pilot, which is another 2 years of Helvetia experimentation, which will focus more on the use cases that you can generate out of the CBDC in productive system. So now that we have established the history of Helvetia, why would you want CBDCs? CBDCs are important in our system because in the traditional financial world, you have assets which settle in one environment, and you have cash which settles into another one. So you have a very siloed financial infrastructure. And as every time you have siloed infrastructure, you have cash on one side, assets on the other, you need to reconcile everything. You need to synchronize everything. So it takes a lot of effort to do so. It requires a lot of energy and calories to be burned to make sure that what happens in one is correctly reflected in the other one. And you need also an intermediary in the middle, so a clearinghouse, for instance, that will basically take the risk of accepting transactions and making sure that what happens works. So with a blockchain, you don't have that, in the sense that the trade happens on one platform where you have the asset which is there, and you have also the cash which is there. So you bring into the same system both legs of the transaction, and as such, you diminish risk and so on and so forth. You generate new possibilities. You eliminate also some of the burden that happens in the traditional infrastructure and so on and so forth. So this is, in a nutshell, why it is interesting to have CBDCs and assets laying on the same infrastructure. Now, I think you were interested to know as well, what did we learn from Helvetia, correct?
What did you learn? What is the things that you would say, okay, pitfalls and success factors behind it?
So while I cannot share everything, obviously, I have some insights that are interesting. So the first one, is what is important to consider when you are building a CBDC. So first is the governance. The governance for the SNB is extremely important. And when you delegate to a third party the responsibility to handle operational processes that involve the national currency, then it needs to be done in a way that cater to any dysfunctions and so on. So I think this was probably a little bit underestimated at the beginning. So how much work will be synced or will be invested into having the right processes in place, the right controls, and so on and so forth. The second one is fragmentation. So if we go back to the crypto world, if you have USDC, which is laying on Ethereum, and then you want to also have it, USDC on Avalanche, on any other EVM compatible blockchain, you cannot have like the same token which is on both, right? So you have to dilute your liquidity over various networks. And the more networks you add, the more your monetary mass is, dispersed, fragmented. It's mathematical. So same for the SNB. The more platforms you include, the more your currency is getting fragmented. And this was always one of the goals of the SNB, was to limit this fragmentation. Now, one learning I have, which is more personal as a product person, is that, and this is not only for Helvetia, but it's in general in the field I'm working in, which is digital assets in the regulated space, is that it is very difficult to balance innovation. So what you want to create as new, which does not exist in the financial place or sector, and what is catching up. And this is very difficult because your clients expect you to offer them the same range of features and products that they can access to in the traditional space. But at the same time, they also expect you to provide them with something new, with new value. And as such, being able to balance what you are willing to invest in one or the other area is extremely difficult. And for Helvetia as well, do you want to have the same functionalities for the money that you have in the traditional world, or do you want to focus attention on new, exciting ways you could use it?
Well, I mean, I understand as well that the pilots, or what you showed with the Helvetia pilots, was as well, like, say, the first step into this T+0 settlement.
Absolutely.
I mean, today when I buy shares or I buy assets, then it is always T+2. And I think that is one of the big advantages of bringing it down to a zero, to instant settlement. But I want as well to take the opportunity to ask the audience if you have questions, or if you want to.
From what I know, many proposals out there for the CBDC project. So I want to know exactly how is Helvetia there are proposals also of having regular citizens having CBDC accounts with central banks, so that's a common for parties.
So it's a very good question. You said it's.
We probably just quickly repeat the question.
Oh, sorry. Yes. So the question was, there are multiple ways to implement CBDCs. Some are retail oriented, some are wholesale. What is the plan for international? So currently the setup is a wholesale CBDC, so only designed to be held and used by regulated financial institutions for interbank payments and financial transactions. I want to just make it clear that the Helvetia pilots are in no way a commitment by SNB to implement the wholesale CBDC. Those are test phases to determine how it could look like, how it could be used, but it's not a commitment that it will one day be available every day in production and so on. As a disclaimer.
As a big disclaimer. I mean, I think that's why we call it pilot.
Exactly.
Okay, some other questions?
I'm not sure if I understand correctly. So did you say you have digitized traditional securities and have accomplished transactions on chain, right?
Mhm.
So I'd be curious to understand, how do you work with external custodians, represent those assets on chain? And if not, if yes, how do you see the custodian versus sub-custodian relationship? And if not, where do you see the efficiency gain coming from on-chain transactions?
Oh, so this is a very wide question that I'm getting a lot. Efficiency gains. It's difficult to prove efficiency gains until you have really scale, right? Because and especially in the financial market infrastructure business, it's usually all about scale. So for us, the efficiency gains are probably coming from maybe the risk side, because by definition, a trade which is made on the blockchain is instant, and as such does not have counterparty risk between both parties, and as such will eliminate the need for all the functions which are here to cater to this risk. In terms of efficiency, you run usually an infrastructure which is available more than the traditional infrastructure. But the real value for me using a DLT will not come from efficiency, but will mostly come from, programmability of the tokens, of this smart contract automation that comes with it, and will come from there. But it's not an exact science. And I think today it's difficult to prove empirically that you have real efficiency gains using a DLT.
That brings me then to the question, to bring it now from the typical trading or digital asset trading world to the blockchain enterprise world. And when you have when you are an enterprise blockchain solution provider, for example, and they are thinking of using or want to have a CBDC implemented. So I mean, as I said, it is slightly different because you use wholesale CBDC. So it is actually the central bank that is issuing the money. In other enterprise solutions, it's probably then more the retail banks that are reissuing CBDCs, which are probably then backed with CBDCs from the central bank again. But from that, what you saw now, especially in Helvetia 3, as you said, is the main pilot that you had. So what will be good ways? What kind of tip, what kind of recommendation would you give to these enterprise blockchain providers? What they should watch out, how they should do it? What kind of recommendations or tips would you give them?
So I'm going to go to the end of my answer first and then start over. The most realistic scenario that we have today for an enterprise which is not a regulated bank to think about how they will be using cash in the future, probably, and this is only my interpretation, will be that you will have, as said, different levels of money. You will have the central bank money, which will be probably wholesale in Switzerland, and as such, they will not have anything to do with it. If you are running, a classic business which is not interacting with SIC, with SIX, with SDX, and so on, then you have no reason to really prepare for a wholesale CBDC whatsoever, because we'll never touch it. Tools will be only used for transactions between banks and for financial transactions. Now, what could happen is that the second level, the M1, would be tokenized money emitted by banks, and so commercial bank money. And here, every bank has an idea about what they want to achieve and how they want to achieve it, which infrastructure they want to use to emit it. As such, I think it's, and now I'm getting back to the start of my answer, it is very early. In the sense that we have 100 different pilots in the world for CBDCs. We have, I think I checked today, 4 which are in production. And none of those are, you know, big economies. So you have Jamaica, you have the Bahamas, you have Nigeria, I think, which is arguably a big economy, but less relevant for us in Europe. So as such, we don't know exactly how it will bloom. We don't know when, we don't know how, we don't know which technology will be used. We have so many different options and so many different pilots that it's actually very interesting to compare them. I was planning to give a small, you know, comparison between Norway and China, which are antipodes in how they see CBDCs. You know, in Norway, one of the main differences in Norway with us in Switzerland or China, similar to China, is that they have accounts at the central bank for all the citizens. And as such, this enables them to think about a retail version of a CBDC.
Mm-hmm.
So how Norway is picturing it is that they would have a CBDC which runs on Besu, on Hyperledger Besu. I'm familiar with this. This is the enterprise Ethereum version.
Mm-hmm.
They are thinking about a near C20 standard for the CBDC. They are thinking about having also a wholesale version, which will be running on Fabric with a bridge between them, and so on and so forth. And this is, I mean, not exactly the same, but closer to what we see in the crypto native space, right? And I find it fascinating. Like it's for me, it's amazing. What China is doing is completely the opposite. They have something which started as a DLT and now is not a DLT anymore. They are heavily promoting and incentivizing the population to use the EU1. So now it is in production in 29 different places in China, and you can use it to get your salary. You can use it to pay for the transport and so on and so forth. But at the same time, in China, they have very strong concurrence challenge coming from the private sector because most of the Chinese citizens are used to use Alipay and WeChat as a payment option.
Mm-hmm.
And this is extremely integrated into the daily lives of the Chinese citizens. You pay for everything with WeChat and with Alipay. So as such, they are facing internal competition, which is I find also funny.
Mm-hmm. 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 Good. Yeah, sure.
So we talk about China will be then retail.
Yes.
So that would be like an actual disruption of the system. But we talk about wholesale CBDCs or even tokenized deposits for banks. I mean, does it have like a huge effect on the actual consumer, right? That's just technology that they can use. It's more efficient.
Yes.
It doesn't really disrupt, like it doesn't really change much about
at all. It should be completely transparent for you, and it should be maybe your transactions will be safer in some way, will be faster, but you, as me, we don't really care about if your trade is being settled right now or in 10 seconds. So like the bank bears the risk.
the retail version of CBDCs.
Yes, exactly. Yeah.
Okay. There's another question.
So my getting is right that this model is more close to China's or
No.
Yep.
Not this, not that.
Yeah.
But different to the Norway. So there will be no direct accounts of citizens.
You don't have this
Yeah,
in Switzerland.
So the question was, will be then this Swiss version be closer to China or closer to Norway?
In terms of citizens having direct accounts.
Yeah, exactly. Citizens having accounts in the central bank. Huh?
So the main difference already from the Chinese version and what we are working on is that we are wholesale, they are retail. So we are dealing with financial institutions. They issue directly the currency to the population. Second difference is that we are using a DLT system. They went away from the DLT system. We try to be transparent about what we do, how we use it. I think there is less transparency coming from China in terms of usage of the wholesale CBDC.
And do you know some consumers who are central bank retail, so something that more people can touch.
So no, it has to be central bank led, and the central bank is not planning to issue or to manage a retail wholesale CBDC.
Yeah, I think that is what the Swiss National Bank was very clear.
Yes.
That they will not issue commercial digital coins or digital currencies. It will be always wholesale, and it is really the commercial banks that will do it. And as you said, it is still a way.
Might do it.
Might do it, exactly, the might. As I just want to say, as you said, we're still very much at the beginning of it, which of course still leaves the enterprise blockchain world a little bit in an unsatisfied situation, because then we need to work with stablecoins.
Sadly, you do, for the time being. I mean, you know, today it seems unrealistic to have a CBDC or at least a Swiss franc which is running on Ethereum or Avalanche. I would be very excited to work on such a project, but currently it feels kind of like utopic. But in 10 years, it doesn't mean that it would be still the case. Like you have tons of initiatives around the world where regulators, where governmental bodies are involved in exploring how it may work. So if you are interested in the topic, I would suggest to see what Project Guardian is doing in Singapore. Because here we have the MIS, which is the regulating body in Singapore, which is working actively with banks to experiment on public chain. And in that case, one of their learnings is exactly this. We need a cash leg on public chain that is reliable, and we, as a bank, are not comfortable always to use other ways of payment.
Okay. Well, that's very good. That's like a perfect closing word from you. I think, yes, unfortunately, we still have to wait a bit for CBDCs in the enterprise blockchain. But I mean, there are alternatives like you have, but of course, like stable coins and so on, or even other cryptocurrencies. But it's still a way to go. But as you said, 10 years is probably when we were sitting here and said, oh, you know, those days when we discussed that, remember this.
I wish.
Was not sick. Well, I thank you very much for the time. And I would as well invite now everybody for the apéro that is outside, and that is sponsored, I think. A last question?
Yeah, but if it's no time for that, I can ask it also in the apéro.
Yeah, let's do it. Let's do it at the apéro, where everybody still, I hope, let's stay here and answer the questions bilaterally. Thank you very much for coming, and as well for the audience on watching us on the video. Thanks, and the next event will be probably then in the new year. Again, from the enterprise blockchain, these one-on-one talks where we dig a little bit deeper than in the normal panels. Thank you.
Thank you.